What's going on, guys? This is Chandler Smith, and today I'm going to answer the great question, and that is, Chandler, what is better? Should I be flipping or buying and holding? And I'm really excited about this video because I think my answer will really surprise you. So with that being said, let's jump into it. All right, guys, for those of you that don't know me, my name is Chandler Smith, and I've been investing in real estate for the last 6+ years. I've had the opportunity to flip a couple properties, and I currently own 99 units of buy and hold real estate. And so when it comes to flipping versus buy and hold, I've had the chance to do both. Now, I'm gonna be very upfront with you in saying that the flips that I have done haven't been crazy. They've been stuff like changing the floors, updating paint, little fixes here and there, and really where I've made my money is buying the properties properly. And so when I purchased them, it wasn't like I was looking for this crazy flip. I was looking for something that I could throw 10 to 15 grand into and turn that 10 to 15 grand into a lot more. And so the reason I'm doing this video is I do love both of these models. I think they both can have huge advantages and upsides. However, I think before you jump into investing in real estate, you definitely need to understand the difference between these two. Because I usually hear people say, oh, I'm gonna go and flip some properties. And a lot of times I'm like, well, hold on here. Do you understand what that means? And so I want to break down the difference between flipping and buying and holding when it comes to investing in real estate. But before I do that, regardless of which direction you're going or what you think, all that I ask you to do is make sure that you hit that like button, subscribe to the channel, and hit the bell. Let's just wait for a minute and make sure that you hit that like button. The big thing that I want to talk about right off the bat is flipping and buying and holding are very different things, okay? Over here, you've got flipping, and here's what flipping is. Flipping is another job. When you're gonna flip properties, you literally are taking on a job because you're purchasing something and you've got to roll through it quickly, okay? When you go to flip a property, you're taking on a lot of risk because a lot of times you're buying it with your cash or someone else's cash. And if it's someone else's cash, you're paying a high interest rate. So you need to roll through that property quickly. On top of that, this is a full-time job. I mean, you are all in, unless you've hired someone to do all of it, which in my mind is going to really hit on your return. You've got to be full bore, all go. You've got a lot of risk. You've got money that you're paying interest on every month. You've got to find a way to get that sold and get the renovation done and get it out. And the thing that's a bummer about flipping is when you flip it, you make money one time. However, it's gonna be a big chunk of money. If you do it right, you should be making $50, $100, $250,000, depending on what the property is, because you can buy something for cheap, you can add value for cheap and in a quick period of time, and then you can sell it for a lot if you do it properly. But the big thing with flipping is this is another job. So when people say they're wanting to invest in real estate, in my mind, this isn't really an investment. Now, if you have a whole team set up and they literally do everything and you just provide the cash and they give you a guaranteed return, that's something completely different, but it still has a lot of risk. The other reason that this is risky is you look at a market like this where no one right now knows what the future is going to bring. If property values drop down and you've got high interest on this property, it's not like you can say, oh, it's cool, we'll sell it in like 2 or 3 years. Because you're paying high interest on it or you have a ton of your cash locked up. And so you've got to make sure you flip it in a very short period of time, and you can get caught with your pants down if the market takes a drastic dip. And that's why when you're flipping a property, you've got to do it quickly, efficiently. You've got to know your numbers, and you've got to understand this is a job where it is a one-time fee that you're charging to flip this property. When you make your 50 grand, that's all you're going to make off of this property. Now, again, it's got its upsides because you can make big money flipping properties, but it is a full-time job. Now, when you look on the other side of things, buy and hold investing is completely different. Now, you might do renovations, but you're looking at a property saying, look, I'm not buying this for what I can sell it for. I'm buying this to get a consistent return on it forever. And hopefully it will go up in value. And if I want to sell it or 1031 exchange it, I'll do that down the road. But I'm getting a passive income every single month, and I'm not doing anything. With a lot of my buy and hold investments, I'll shop the deal, and the second I own it, I don't see that property or think about that property again, except for the fact that I get a check from that property every single month. The other thing you've got to think about is with this passive income, it's a much smaller return every year than the flip that you're going to do, because the flip, the return is figured out completely differently because you're putting money in, you're trying to flip it, and you're trying to get a big hit. With this, you're putting money in, you're letting that money sit there forever, and you're hopefully getting a consistent 15 to 20% return on that money every single year. Now, it's also going up in value. And again, you're gonna flip this property in the future, whether you 1031 exchange it or sell it, but that isn't the reason that you bought it. So that when the market does dip, you don't care because rents are gonna stay pretty consistent and you're continuing to get your cash flow. The other thing I love about buy and hold is with buy and hold, you can use the depreciation from the property to offset what you make every year. So you're not paying any tax on this money. Where when you're flipping properties, you are paying tax on the gains that you're getting from flipping that property. And so again, buy and hold has a huge advantage from a tax perspective, from a risk perspective, from a work perspective, but it's not going to pay you as much in 1 year as a flip is. You're definitely going to get a bigger return more quickly, but that's because it's requiring a lot more risk and a lot more time when you're flipping property. So that's a pretty quick breakdown of the pros and cons of both. And you don't want to jump into flipping if you're wanting something passive. If you're wanting a quick hit in a year, you're not wanting to get into buy and hold because you're going to have to let that money sit there for a long time and get a consistent return. Now, I know a lot of you are saying, Chandler, which do you prefer? It sounds like you're leaning towards buy and hold. Yes, I don't have a flipping business, all right? I definitely lean towards buy or hold. However, I like to do a hybrid, and this is where I believe you can make a lot of money. And it follows kind of the BRRRR strategy, which is buy, renovate, which is flipping the property, rent it for high, and then refinance to where you can pull your money out and you don't have your cash or high interest locked up in the property to where then you can sit back and it turns into a passive investment. The reason I like this strategy is you can get a big hit by doing the flip and refinancing where you can get all of your money back out, and sometimes you can even get cash back, but then you continue to make money on the property forever. And so you kind of get to capitalize on both strategies. Now, is this a strategy that requires a little more work and effort? Yes, it is, but I've got a team in place where for me, it's become pretty passive, where we're not taking on these huge projects. We're taking on projects where we can add pretty big value to the property by only spending $10,000 to $15,000 per property. And then we get to go and capitalize on our strategy where we're continuing to make money on it forever. We're not paying big taxes on the renovations we did. As a matter of fact, we're getting to use those as deductions, and it all works out because we're not paying taxes. We're getting consistent returns that are higher than they would be, and we're not locking up as much money as we would just using the normal buy and hold strategy. And so both these strategies are awesome, but I think the best strategy is putting them together and doing a hybrid where you're doing renovations on a property. You can refinance after you've rented it out, and you can continue to make money on the property forever. Now, I hope this video was informational for you, but the reason I wanted to do it is I see so many people that don't know the difference, and they think that investing in real estate is flipping a property, which really is a high-risk business. Now, I'm not saying don't do it. I'm saying understand that it is a business like any other business that you need to make sure you understand what you're doing. Because if you just go in and try to flip a property, you can end up negative really quick if you don't know your market and you don't know what you're doing. On the alternative side of things, if you go into a buy and hold investment, even if you're an idiot, all right, you buy something totally stupid, you're usually going to be able to cash flow or at least get close to cash flowing. The property's still going to go up in value. You're hopefully going to get to a place where you're cash flowing really well, even if you've been an idiot. And so in my mind, a buy and hold investment is a great way to ease in, especially if you've got money, you're not wanting to use a lot of time, because then you can sit back, you can get a consistent return, and you're not dealing with all of the risks and taking on another job like you would be with flipping a property. What is my answer between flipping or buy and hold? My answer is if you're gonna be a flipper, you've gotta treat it like a job. You've gotta know your crap, you've gotta know your numbers, and you can kill it, and that's awesome, and it's a great way to create an active income. However, if you're looking for a passive income, you've gotta go the buy and hold route. It has some huge advantages when it comes to taxes, consistent income, not having as much risk. I mean, in my mind, I love the buy and hold strategy. However, if you can figure out both strategies.
The important difference here is with win-win-win, we all win.
And put them together, it can be a win-win-win.
Win-win-win. No.
And that will put you in a situation where you can build massive wealth very quickly if you get the correct systems in place. And it can become very passive if you want it to be, where you throw money at a property and then you've got a property where you don't have a lot of money locked up in it, because you can pull it out and you can continually cash flow from that property while getting appreciation, principal pay down, and everything else that comes with it. So if you guys enjoyed this video, please remember to push the like button, subscribe to the channel, and make sure you hit that bell, because my goal is to help you to create a huge passive income. And in all of my other videos, they talk about the things that you can do to be able to do that. Thanks so much. Have a great day.